Hi folks, Lee Gettess here with the Market Sense for the week of January 8th, 2013. Happy 2013, everybody. The charts I use come from the Trade Navigator software, same as for the last I don't know how many years. And the first chart is the weekly bond market. And you can see bonds broke down pretty good at the beginning of the year here. It actually looks like they might have broken down out of a sideways pattern, but if you look at a big picture over the last several months, going back into the middle of last year, we still have these lows down here in the 143 area that they are holding. This week, I think we could give them down to around 142.20, possibly even to the lower Keltner channel at 141.28. But they at first have turned back up, and they're right at a critical area here. This resistance here at 145.12 is exactly what should hold if they're going to turn back down. It's clearly the lower moving average, and it matches a previous swing low here, and that's the area they should turn down from if they are going to continue to trend down lower. If this is just testing the bottom of the sideways pattern, then we can probably see them back up around the 147 area here at the green line, and possibly even all the way back up to 148.20 or so up here at the upper moving average. The pattern may look like they're rolling over, but you got to remember we're still dealing with a market that the Fed is actually in buying. And we've got maybe a couple of years of knowledge about that, but we really don't have any long-term idea of how a market behaves when you've got an entity with unlimited funds buying them. So, you don't want to go too far against the Fed, I don't think. They could break down. They technically look poised to break down, but just remember the Fed's buying them. Now, moving to stocks, we had a different situation. We had a big spring up here at the first part of the year. And it's kind of interesting the way they've behaved since that move up. They've kind of gone sideways. So you can make a case that they're doing well because they're holding in and not giving up those gains. You could also make the case that it's a little disappointing that they haven't shown any follow through. So what we've got right now is a very quiet week so far. The support they should hold if they're going to continue up is around 1443, and this is almost a mirror image of bonds because it's the upper moving average here at the red line, and it also coincides with a previous swing high. So I mean that's a good area right there around 1443. If that holds, boom, I mean we could be looking at 1480 up here, the Keltner channel, and clearly taking out these old highs. We actually did poke just above these old highs and look like we're on our way to new highs, and that's one of the things that's a little disappointing, that they've gone to new highs and not shown follow through. But again, they're holding the support, so it doesn't matter at this point. If they break below this, they could still find support here in the 1420 area, and that wouldn't be horrible. And even break all the way down to 1395 wouldn't necessarily mean they're in major trouble. But since they have gone to new highs, you'd kind of like to see them hold the upper support and keep going if they're going to keep going at all. And there absolutely is a risk that they're not. I mean, yeah, I know we got past the fiscal cliff and all that crap, but hey, we have a debt ceiling. Think they might want to argue about that a little bit in Congress? I think so. So anyway, that's what we've got for you today. Hope you can find something profitable to get yourself into, and hope 2013 works really well for you. Thanks for checking in to see what we think.